let's speak about two beaten down growth stocks that I think have an awful lot of long-term potential, both of which I do indeed own. What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we're going to speak about two of my favorite relatively safe growth stocks. Now, the reason we're only going to be speaking about two companies today is because I'm going to make another video relatively soon speaking about a lot more of the higher risk growth stocks that are beaten down even more, 40, 50, 60+%. But I wanted to make this video first of all because I believe the two companies we want to speak about today are a little bit safer and have a lot, and I mean truly a lot of long-term potential, and they've both been beaten down quite considerably. So the first one you're going to see on the screen as of this moment in time is Palantir, okay? One we have covered before they even went public. We spoke about these a very long time ago and we have kept up to date with them. And then the second is Corsair, okay? So one I haven't spoken about quite as much, okay? I didn't get in particularly early, but I want to speak about them because as far as, you know, relatively safe long-term growth stocks go, these are two of my absolute favorites right now, and just a quick look at the chart will show you that they've both been beaten up pretty badly. So do understand that these, to me, you know, aren't the highest risk companies in the world, especially not if you do want to be involved in growth stocks. And quite thankfully, I think they're actually good at current prices. For the longest time on YouTube, we were speaking about companies, or I was speaking about companies that I really loved, but I wasn't happy with the prices at all. Whereas both of these companies, where they stand today, I would be willing to buy them with a long-term outlook, with a 2 to 5+ year outlook. So that's what we're going to be speaking about today, my friends. Right before we do get into today's video, can I please ask you to just hit that juicy like button? Why not, my friend? It's free. Drop me a comment down below. Let me know what you think of either of these companies, but also let me know what your favorite, you know, relatively safe growth stocks are right now. And please, my friend, if you are indeed new around here, hit that juicy red subscribe button and join the family of investors, baby. Why not? Also, if you're interested in joining my private Discord group, that is indeed the first link in the description. In there, you get access to all of my buy and sell alerts. It's a private community. It's awesome. We're going to be way more active in there. We're going to be having lots of really interesting chats. And if you'd like 2 free stocks on Webull, hit the second link in the description, sign up, deposit $100, get yourself some free money. It's that easy. So with that being said, we're going to jump into our first company of today, which is indeed Palantir. And again, I am a shareholder of the company, and I have bought them on several occasions. I bought them down here. I bought them in the mid to high 20s. So yeah, I've bought them in a few different places. Now, this is one where some people may not agree with me that this is, you know, a relatively safe long-term growth stock because they haven't been trading particularly long at all, and the valuations aren't the absolute best in the world. Now that we're back down at about $23 a share, I think the valuations are actually quite nice. There is definitely a little bit more downside, I won't lie, but I mean, they hit the bottom right at $20 a share. I mean, they had peaks of $45, my friends. Some huge volatility in a relatively short period of time. Worth noticing off the bat, okay, if we go over the tip ranks, there are 8 analysts offering 12-month price targets for this company right now. We'll see the low is at 15, the average is at 25, and the high is at 40. So if you go and look at a lot of these individual analysts, there's, you know, there's a lot of different opinions out there for this company right now. But there's a few reasons in particular I like them right now, keeping in mind that they've fallen an awful lot. I mean, they're still down nearly 50% from their absolute short-term peaks. Found out about their Q4 earnings about a month ago, okay? Their shares fell after the fourth quarter loss, but revenue beat expectations. Now, I don't really think this was much to do with the quarterly earnings. I think it was just the market at the time. But anyway, what is important to take away from this is that they did beat analyst estimates on revenue, and they lost 8 cents per share. Now, this isn't a surprise. They're more than likely going to have a negative EPS for a little while longer as well. So revenue was $322 million versus $300.7 million expected. Now, when you look at this revenue and you compare it to a company that's a $40 billion something market cap, that can be the first red flag you see, okay? That revenue is going to have to go up absolutely huge. And if you go to their Q4 business update towards the very end here, you're going to see their long-term orientation. 5-year outlook, revenue of $4 billion or more in 2025. So obviously that does show some really good growth potential. Average revenue per customer for 2020 came to $7.9 million, which was up 41% from 2019, and its top 20 customers generated $33.2 million on average in 2020, up 34% year over year. Now, this right here can be perceived as a good thing or a bad thing. I have seen both bulls and bears use this, you know, point to their advantage. Me personally, as a bull, I do see this one as a positive, okay? Their contracts are extraordinarily sticky. They are long, they're worth a lot of money, and we have seen them working with so many governments, etc., that, you know, these customers stay around. So oftentimes we don't really like to see the large majority of a company's revenue come from, you know, a handful of customers. This is their 20 top customers. It's nice. I'm happy to see it, in all honesty. Just about a week ago, April 5th, Palantir selected for the government's Safer project worth $89.9 million. And so this is the thing, my friends, and this is where we can see Palantir's growth happen continually. You really can get a good prediction on what it's going to be. The contracts are out there for us to look into. We can have a very, very good idea of what Palantir is going to make next quarter and next year and even 2 or 3 years down the line. We can also look at, you know, the growth they've seen over the last year or two, even when they were a private company. They anticipate revenue growth of more than 30% as of right now, and they expect revenue growth of 45% in the first quarter of the year with a midpoint of $332 million. So yeah, they've been doing well. One more thing, April 14th, okay, I believe that's the day this video is going up. Palantir announces double-click demo event on April 14th. This is going to be awesome. I am registered for it. I'm going to be watching it. I'm excited to see what comes out. And if you want to look from a little bit more of a technical point of view, you can see that we're literally right on top of this long-term area of support. And you could say, you know, right here where they peaked out at the bottom, there's nearly a little double bottom there. That's right about $20 a share. It doesn't represent too much downside. But I want to say that I do think over the next 6 months, year, maybe even 2 years, it could be a lot of back and forth. It could be a lot of up and downs with this company. Again, they're new to being publicly traded. And the nature of the business could genuinely lead to some huge volatility. But again, that's why to me, this one most certainly is a long-term investment. Palantir has been around a very, very long time. It's only recently that, you know, they're obviously gone public. We know a lot more about them. And I think that could lead to some increased volatility in the short term, being 6 to even 24 months. Worth noting as well, ARK Invest is quite heavily invested in Palantir, and you can see that they have been consistently buying for a considerable period of time. There is some minor, you know, sells on a daily basis just to keep the weight where it needs to be, but ultimately they have been buying more and more and increasing that weight percentage. But that's Palantir. I more than likely will make a full video on these guys soon after we find out, you know, if any good news comes out tomorrow. Now, next up, we're having a look at Corsair, okay? So I haven't been in these guys as long, and I actually believe I'm in the red with this company. Yeah, I just checked. I'm down about 3.5% in these guys, and I've bought them on a few different occasions, so you can probably tell that I'm relatively happy at these prices. And again, what's very interesting when compared to Palantir's price chart, they're also literally dead on that long-term area of support that we created all the way back in November of last year. And this is something that you'll see with an awful lot of growth stocks out there, especially ones that IPO'd around that time, around, you know, towards the end of the second quarter or the start of the fourth quarter. You're going to see a lot of price actions such as this one. Now you can see again here a little bit of a double bottom, and it also coincides over here. That's right at around 28.50, let's say. So again, a similar 15 to 20% downside in the short term when compared to Palantir. Now I came across this interesting article earlier on, okay? Corsair reported good earnings. Here's why the stock is falling anyway. Look, we know why the stock's falling. The whole stock market was falling. Every growth stock under the sun was falling, especially all of the overinflated ones. So Corsair handily beat consensus estimates and issued an outlook for the year that topped analyst models, and said it would be selling even more video game peripherals had it not been constrained by its available supplies, something of a good problem to have. In front of me right now, I have 2 Corsair products. I just built a new PC. There are Corsair products inside of there, and let me tell you, they're not lying. It is very difficult to get these things. So they were supply limited for most of Q4 in almost every category. They need to get those numbers up, but again, we know that the Roni has had some long-lasting effects on many companies in regards to things along these lines. We can't put all of the blame on them. Their sales could have been substantially higher, and we could have manufactured and shipped more products, okay? Now, considering that this was an issue and they still bet, you know, estimates at consensus, that's happy days. So they reported adjusted earnings of 45 cents a share on sales of $556.3 million. They expect full year 2020 run revenue of $1.8 billion to $1.95 billion, when analysts expected about $1.71 billion. So straight away, I mean, you look at that last quarter report, they expect to do a little bit worse over at least 1 or 2 of the next coming quarters. That's because Corsair expects that as people return to activities unavailable during government-ordered lockdowns around the world, the company's growth would moderate in the second half of the year. And I mean, it makes sense, guys. You know, a lot of people went out and bought a lot of these products because there was nothing really else to do. And again, similarly to Palantir, this is why I could see short-term volatility with this company over the next, literally, as of this moment in time, to the next 12 months. I think a lot of what happens with these guys in the short term depends on what happens with the Roni. So we're going to have to wait and see. But also, it's argued that the peripherals the company sells for video game streaming were more central than they have ever been before. And I mean, yeah, I literally have their stream deck and I have their key light right here recording this video. YouTube revealed they had 40 million gaming channels, a number that was far higher than most industry watchers have been estimating, okay? And I mean, it's not just gamers who use these products, a lot of YouTubers do as well, a lot of stock market YouTubers. So we can see that our next consensus estimate for our EPS is 31 cents a share. Compare that to 45 cents a share, we're expecting this next quarter to go considerably worse. Now again, this is down to the reasons that Corsair essentially just lined out for themselves, but we are going to have to wait and see. Now this may well worry some people in that, you know, if this is the price we're at currently when things are going quite well despite the market being down, what's going to happen when the next earnings report comes out? I honestly don't think it's going to have too much of an effect. I think the large majority of people who are getting involved with Corsair are actually long-term investors. I mean, yeah, you could very arguably say that it's going to come all the way back down to, you know, the 20s, mid-20s. It could well happen, who knows? But I think it would take a lot more than their EPS going down to 30 to 35 cents to make that happen. Now, we do look at Corsair price targets here, okay? A different story than Palantir. 7 analysts, okay, as of right now, low estimate of $44, average of about 49 and a high of 55. So you can see they're quite tightly kept together, and these are 12-month price targets. The company's currently trading at 33.50-ish a share. I mean, that already represents 30+% upside. 30% in a year for anything that's a long-term company is very, very good. Now, as somebody who is interested in this industry of, you know, peripherals, gaming, etc., etc., I know just how popular Corsair is. They are very, very high quality products, and they are best in market for several products that they produce. There is a lot of competition, but we have seen this industry growing so quickly. A lot of people will be aware of skills, and that has just brought to light so many facts on how fast the world of gaming is growing. And a lot of people, again, will bring up the argument that once the Roni's gone, you know, these trends may well stop. Go look at the data. Online gaming has been growing year in, year out, pretty much forever. So my friends, they are two long-term growth stocks that I personally deem to be at quite good value. Does that mean they can't go down in the short term? No. Does it mean they're a sure bet? No. But if you're looking to invest in individual growth stocks, you know, you're not necessarily looking for the safest place in the world. You're not looking for index funds. These could be right up your street. Do some research into them. Again, I will have a video coming out soon with a lot of the higher risk plays. You know, the ones that we speak about on this channel a lot of the EV related companies that have been hit particularly hard. Which ones I think are actually at the best value, the best risk reward ratio. But anyway, my friends, that is it for today's video. If you watched all the way till the end, you are a true legend, and I really hope that you enjoyed and took some value. If you did, could I please ask in return that you hit that juicy like button, maybe drop me a little comment down below, and subscribe if you're new around here. All of that would mean the world to me. And again, if you are interested in joining my private Discord group, that is the first link in the description. It's a juicy community, and if you want some free money, hit that second link and sign up to Webull. Anyway guys, I hope you all have a beautiful, blessed day. I'll see you for another video very soon. Peace.